Alright, what's up everyone? Apologies for the late start. But I think we just had the former president, President Trump, arrive at Trump Tower. And I completely forgot that they're having some sort of a rally, I believe tomorrow, at Madison Square Garden. So we'll get started here in a moment. This huge motorcade of the NYPD police officers on motorcycles. There must be at least 8 or 9 of them. Look at that. It's kind of cool to see. Everybody, hopefully you're having a good weekend. So just joining, I believe the former President Trump just arrived at Trump Tower with a rally tomorrow at Madison Square Garden. Completely forgot about it, so if you're planning on traveling into the city tomorrow, I probably wouldn't drive. I'd take public transportation because it's going to be wild. Hey, what's up, Linda? Anyway, we'll get started in just a moment, everyone. Apologies for the late start. It's about 9:30, give or take, here in Midtown Manhattan, on the corner of East 57th Street and Madison. Let me see if I can wipe my lens. As you can tell, they're ripping up the entire road here. Park Avenue, Madison Avenue. Everything is going to be paved really nicely here in a moment. But also apologies for not being able to be on last night. Things have been getting pretty crazy. I had to attend an event last night, but pretty good week in the markets. Lots to look forward to next week, for sure. We have almost every single company in the Mag 7, the Magnificent 7, will be reporting earnings next week. It's going to be very, very tech heavy. You're going to have, Google reporting, Meta. I think Amazon is going to be in there too. And you can see they really roped the entire thing off. You can see the checkpoints here, security checkpoints. Looks like there's some Secret Service agents here coming in and out. Again, at the Trump Tower. It's definitely like maximum security. Anyway, we'll go ahead and get started. Good evening, everybody. Welcome back to Walks on Wall Street. Today is Saturday. I think today is October 26th, I believe, 2024. It's a pretty cold and blustery night, and it is the Halloween weekend. Yesterday, and I didn't even know this, but I did watch the game. It was the first game of the World Series. So the Yankees, New York Yankees, and the LA Dodgers are both in the World Series. Pretty cool. So we have a coast-to-coast battle for the World Series of 2024. Pretty cool. I was watching a little bit of the game. I'm not a big baseball guy, but since the Yankees are in the World Series, gotta watch it. Absolutely have to watch it. I think we lost, but anyway. The Papa Smurf OG, good to see the FDNY in the house. You're gonna see this very unique scaffolding that they were able to do right outside the LVMH store. Look at how nice this looks. So they made it look like a Louis bag. Isn't that pretty unique? They're almost completely finished. Now, I'm not sure if this is just the design they wanted to do for the holidays, or if this is what they wanted to do to cover up all of the ugly scaffolding. I actually don't know, but it looks like there is scaffolding on the building anyway. Maybe they just wanted to pretty it up or something like that. But we'll see. Now, an interesting statistic that I read this week in Barron's was out of all the companies who reported earnings so far this earnings season, 86% of those companies beat expectations, and the average earnings beat was 6%. So we're off to a pretty good start, and we talked about this at the very, very beginning when we covered all of the major financial firms reporting. Earnings are coming in pretty solid. This week was a little bit of a lackluster week in the market, but the market deserves to kind of cool off and pull back a little bit. But it's going to be an action-packed week. Meta is going to be reporting, Alphabet, obviously Google, Amazon, all of the major tech giants will be reporting. And we're going to hear the preface to the FOMC meeting, which should be interesting. So we'll say hello to everybody in the chat, and we'll go ahead and try to head as far downtown as we can. We'll let these police officers go before we head downtown. What's up, Alan? It's good to see you as always. Yeah, you can tell Trump is here because every time he is, look at these sanitation vehicles lined up. So you have not one, not two, not three, not four, but 5 sanitation vehicles right outside of Trump Tower. Now, for those of you who don't know, tomorrow is going to be that big rally at Madison Square Garden, so I can only imagine how crazy the traffic is going to be. It's going to be absolutely insane. Let's actually stay on this side of the street for a second, because you'll be able to see in a little bit better detail. Look at that. Look at how unique this is. Person is here. What's going on? TK0210. Welcome. So this is either the covering of the scaffolding on the Louis Vuitton building, or it's just sort of a decorative piece. Amazing design, very creative too. It's pretty cool. Hey, Reggie44, what's going on? DC322, Lark, welcome. Erica, cheers. Ren1018, always a pleasure. It's good to see you. Now, I was reading this other piece of interesting information as we head into election season. If you haven't read the main story in Barron's this week, which just came out this morning, or I mean, I guess it depends on when you get the paper, but the paper really talks about something that we have been hammering on for a long time as it relates to the financial markets, and it's that don't invest with your politics. The article was very, very well written, and it was talking about a lot of the people that sold their stocks on a whim when President Trump was elected in 2016, and it was also talking about those people who kind of sold their stocks on a whim when current President Joe Biden won the election, right? And it's just a reminder that what drives markets and what drives stock prices is not who's in the office, right? It's not who the president of the United States is. It's earnings, it's corporate earnings. So around these very volatile events, like the presidential election that we have coming up in less than a week, pretty much a week, it's important to understand and realize what's most important. Let's actually cross to this side. And it's that, look, if the fundamentals are improving and things are headed into the right direction, if corporate profits in America are going up and expanding, and if GDP growth is expanding in the United States, well, you should probably have a net long bias on the market, for sure. And I'm not sure if you guys saw this, but the GDP Now website, they just announced that they revised GDP growth higher again. So additional revisions for full year GDP growth for the United States, which is fantastic. So just as a little bit of a reminder, don't get kind of freaked out around the election, regardless of the outcome, I should say. Make your investing decisions based on the earnings of individual companies and overall gross domestic product growth or lack thereof in the United States. That's kind of the two main things that I'd say. But look at this, you have tons and tons and tons of security here around Trump Tower, as it should be, right? I would probably assume that 56th Street is probably going to be blocked off almost in perpetuity, I'd say. Who knows? Hey, NBA Elias, good to see you. Lance is here. Chris Thompson, what's up, Chris? Road Dog, D, cheers. I know, Alan says, I'm just ready for it to be over. Yeah, it's been a lot. Yeah, I mean, you know, I'm sure everyone saw the most recent Joe Rogan interview with President Trump. Regardless if you like the guy or not, I think everyone should probably watch that because it was quite refreshing, actually. And a lot of the time they didn't even talk about politics. It was just kind of like a normal conversation. So to Alan's point, I hope we can all go back to a time where if you vote for a Democrat or if you vote for a Republican, you don't demonize either side and say, oh, you're evil. If you vote for Kamala Harris, you're an evil person. Or if you vote for President Trump, you're an evil person. It's just kind of exhausting. I think everybody agrees. I think the mainstream media has really been the main pumper of that narrative. You know, the election is riding on really about saving our democracy, right? If one candidate wins and one candidate loses, our democracy could be at stake, when we know that's just all nonsense, right? On both sides, right? You have the rhetoric from the Democrat side of the aisle saying that if President Trump wins, it's the end of democracy as we know it, and we're going to be in a dictator on day one, which is obviously just total nonsense, right? Anybody who has a lukewarm IQ understands that that's propaganda, that's nonsense. And on the same side, right, you have the Republicans saying if Kamala gets in, it's the end to the United States and the market's going to crash. The S&P 500 is going to go down 60% and your 401ks are going to be ruined. And that's obviously it's just nonsense. So I think hopefully after this one is done and out of the way, we could go back to not being so hyperbolic and just being normal people, right? If you have a friend or a coworker who supports, you know, candidate XYZ, we could all just accept that they support that person and just move on and just be normal human beings. So yeah, the Rogan interview was super refreshing. My hope is that current VP Kamala Harris goes on the Rogan experience, because it really is just like brings people out as their normal self, just having a conversation. People are normal, people are people. You don't have to be scared of, you know, the Trump boogeyman or the Kamala boogeyman, just normal stuff. So Anyway, that's my 2 cents on the interview. So I would recommend everybody check it out. Hey, what's up, Alexander M? Good to see you. Rick C is here. Cheers to you. Canada says, I have a feeling Tesla will do good next week after all the Elon talk. Well, aside from the Elon talk, Tesla had a phenomenal quarter, which we talked about at length last week. I mean, Tesla really blew it out of the water on their corporate earnings, as expected. All 3 main business segments for Tesla are returning to margin expansion. So you have autos, right? Their vehicles, their margins are going back up. You have the energy generation and power and energy storage business. Revenue, I think, grew 52.5% or 52.3%, something like that, year over year on 30% plus margins. That's massive. I mean, the energy storage business at Tesla by itself, right? If they just spun off that business, and let's say if that was its own publicly traded company, over time, that's going to be a multi-billion-dollar business just there alone. So it was really positive. Tesla's earnings was freaking lights out, in my opinion. Yeah, Canada says I was very happy about it. I was very happy about it too. Tesla, I think, was up about 10% after hours, rallied an additional 10% throughout the day, and closed right at the high of the day and the high of the week. I believe at one point it was up 20% on the day. So it looks like, and we've been talking about this, it looks like Tesla probably bottomed in April. Tesla stock trades in very cyclical ways. And I mean, the stock has been going nowhere since 2021, right? And we all know what happened in 2021. That's when we had that initial push of the Fed raising interest rates, 500 basis points, which really killed and crushed a lot of growth stocks. And we were writing about this too. Many people think that, we haven't had a bear market in a long time. I would disagree. If you're a portfolio manager, you're a trader, and you've traded through 2021 through 2022, I would argue that that's one of the harshest bear markets we've been through in growth stocks since '08. I mean, many of the individual stocks, particularly those, high beta tech stocks, they were down like 70+%, sometimes even more. Right? Think about the Pelotons of the market, Zoom, ticker symbol ZM, and the like. NBA Elias is Tom. That was Tesla's best day in the stock market in nearly 10 years. Yeah, really crazy. I think it was the 3rd best day in Tesla's history, which was great. Now, there was also another, let me just try to get away from the noise. There was also another amazing article. You got to tip your hat to the writers at Barron's this week. I mean, I couldn't put the paper down. It was such good writing in there. And a lot of good lessons too, right? Oftentimes, I don't take my own advice. And it's tough in the investment business, right? I'll give you an example. As we are walking outside 53 West 53rd Street, I've been an extreme critic of the platform Robinhood. I'm sure all of you may have seen me talking, negatively about the company and this and that. But I always preach, which has to do similarly, I always say don't let your politics get in the way of a good investment. Obviously, talking about Robinhood is not politics, but the fundamentals of the business at Robinhood, I mean, it is really improving significantly. And whether I like it or not, right? Whether I like the trading platform or whether I like the brokerage or whether I like the CEO or not, the data shows that more and more Gen Z and millennial investors, by a long shot, are choosing to allocate their money to Robinhood. So there was an awesome article in Barron's talking about how they're essentially the amount of assets has absolutely ballooned on Robinhood. Their account growth continues to be steady. And it's a very asset-light business, right? So if you think about Robinhood competing with the likes of Charles Schwab, for example, that just so happens to be right across the street, Charles Schwab is a more diversified business and a more diversified organization. They have brick and mortar, they have wealth management, they have physical storefronts and locations that you can go into. Obviously, you don't have that for Robinhood, but that's probably one of their advantages, right? They don't have to pay a lot of overhead. So Robinhood is more of a tech-first, tech-focused company. If they can come out with some sort of wealth management offering, maybe like a robo-advisor. I know they just recently acquired some data analytics company, like that's very AI-focused. I think it's one to watch. I really, really do. 3 quarters ago, I believe, was their first profitable quarter. So I actually moved that stock onto the watch list, and I'm actually going to be officially initiating coverage on Robinhood. Doesn't mean I'm going to buy the stock. I'm just going to follow the stock, model it. Same thing with this cybersecurity company called SentinelOne. Ticker symbol is S. But yeah, if you have some time, as we look up at 432 Park Avenue, check out that article. Again, hats off to the editors over at Barron's. Very good article talking about the culture shift in the investment business, right? Looking to the future. And it was a really good lesson for me because I don't like the company, right? I still don't like the company. I probably would never allocate any of my money there, but a lot of people are. And especially the new generation of investors. Gen Z and millennials, by a long shot, are using their funds and they're choosing to use Robinhood as their broker dealer. Now, in addition, which I didn't know about, which the article also talked about, I believe they're doing some sort of a major incentive where they will match up to 3% of any assets you move over, right? So if you move over, $1 million, they'll pay you 3% on that million to move over, which is quite a large sum of money. The biggest data point, and then I'll stop rambling about Robinhood. The biggest data point is they have very, very high retention rates. So people that are moving their funds to Robinhood are actually choosing to stay there for quite some time, which is surprising to me. But if customers are happy and they are consistently growing customers, that is a very, very, let's just say, sustainable business, especially now that they're getting into subscription basis. So I believe the Robinhood Gold is like $5 a month, and they have about $142 million in ARR in subscription services. So I think it's one to watch. It's very interesting. Anyone have any takes on that, either for or against? Alan says, while I don't use it, I kind of like outlets like Robinhood. It's getting younger people into the markets in some capacity. I think that's a pretty good take. These are the new subway entrances here. Peter says, I like brokerage that has a physical location so you can deal with a person if a problem arises. Dealing over the phone and navigating an AI menu to get a person who can help is a nightmare. That is true as well. Joel PM says, personally prefer brokers for grown-ups like IBKR, Interactive Brokers. Gamified trading is not for me. I 100% agree, and that's kind of my qualm with Robinhood. But again, if you look at the metrics, most new generation, like young generation people, right, that are in high school, going into college, and even I kind of monitor it as well on social media. You see all the young kids nowadays that are talking about the markets in their videos. You don't really see I've never seen an Interactive Brokers screen share, right, on any of these kind of videos that I watch of these young kids now. It's always Robinhood. It's always like a Webull or something like that. Now, I use Interactive Brokers, right, myself, and I use Schwab. I don't use Robinhood. But maybe as an investment, and again, the reason why I bring it up, who remembers almost one of the greatest winning stocks of all time when Charles Schwab was really first coming on the scene and disrupting Wall Street as the discount broker, right? So if we read throughout history, and I actually just bought Charles Schwab's book to kind of reflect, because if I'm going to be covering Robinhood stock and initiating coverage, I want to know every single thing about Charles Schwab when they just started, because though they were kind of the bully on Wall Street back in the day, if you remember correctly. Obviously I wasn't old enough to witness that, but just reading about it and things like that. Schwab is one of the main reasons, one of the many reasons why commissions have trended towards zero on Wall Street. So it should be quite interesting. NBA Elias, Tom, I like Interactive Brokers and Schwab. Tony says, everyone I know 30 and under use Robinhood. Same here. I'm like one of the only people who use Interactive Brokers. A lot of the hedge fund managers and institutional guys that I know that are 45 plus, none of them are using Robinhood. They're all using the brokerages that we just talked about. Someone says SoftBank. What about SoftBank? I'm a big fan of Masayoshi son. Bart R says, hey Tom, I like Ameritrade. Where in the early 2000s you could trade for $7 or less. I feel like Robinhood took over where they left off. Yes. And much of the business model has been, hold on one second. Much of the business model has been built on payment for order flow, which is actually very, very good. It's interesting because when that whole meme stock debacle went down, everyone was upset about the payment for order flow, but there would be no free trading if there was no payment for order flow. We'll go around and we'll go this way. Actually, we won't. We just missed the light. We'll cross up one and then we'll head over to 8th Avenue. We're crossing 57th Street. This is New York City's Billionaires Row. Yeah, maybe that could be some weekend research for everybody. Look at the trajectory of Charles Schwab, ticker symbol SCHW, I believe, since it IPO'd until now. That was one of the most powerful stocks. And looking into the new age of AI, technology, just how people interact with each other and communicate, it's more of a community feel, and I feel as if that's kind of what Robinhood is. I don't think it should be ignored, and I think everybody should be paying attention to it, because that could be a massive winner, assuming that they can continue to gain more customers. JC says, isn't there some rally in New York tonight? Yes. Well, tomorrow, I believe. If you're referring to what's going to be happening at Madison Square Garden, there's going to be a Trump rally at MSG. Ben says, I worked for Charles Schwab in San Francisco back in the early 2000s, closing those deals. That's fantastic. So since you worked for Schwab right in the heart of San Francisco back in the day, I guess my question selfishly to you is, do you see any similarities with the culture, with what's happening now on, I should say, on Main Street, Wall Street, right? Like retail trading. Because Schwab, they were the disruptor, right? They were kind of the move fast and break things equivalent, right? If you've ever worked in Silicon Valley, that's what the Silicon Valley guys and girls say. You know, move fast and break things. That's what kind of Schwab was. And now with Vlad and Robinhood, I see them as the vigilantes, as like the crazies. But over time, right, if that's where the future's going, I don't think it should be ignored. Who knows? Hey, Solo 401, good to see you. Thanks so much for joining us. Now here's another really good comparison. How many of you saw the article come out, or just, I should say, the reports, that Vanguard, as an institution, will not be offering any type of Bitcoin products or services to their customers? And they made a statement that it's not in their, you know, core founding values. We're not going to be offering it. We don't want to get involved in it, yada yada, this and that, which is fine. But learning from history, and I'm not even saying you have to like Bitcoin, right? I'm not even saying you have to like cryptocurrencies. The point is, if you look at all the data and you do a survey of the younger generation, digital currency, digital payments, fintech, Bitcoin, crypto is what the young kids and what the young generation are interested in. And there's a very high percentage of younger individuals who have an allocation to these assets. So if you think about the future of your client base that's going to be inheriting the most amount of wealth, it's going to be the largest wealth transfer in human history that the millennials and the Gen Z is going to inherit. And if you don't have the products or the services to offer your customers, they're going to go somewhere else. So I think that, I really do think that they are making a major mistake over there at Vanguard. I don't think it's going to damage their business just because they're so massive, but over long periods of time, if you're not also adapting and at least offering those services, I think it's a problem, in my view. Hey, Ken Bell, good to see you. This is off to see the Rangers in Washington this week. It will be interesting being a Canadian down there. So close to a US election, yeah. Wow, that's right. Yeah, hockey season just started. I think last night the Islanders were playing the Devils, I think. Because I was watching Game 1 of the World Series. Yankees unfortunately lost. And I think the Devils were playing the Islanders too. David S. says, yeah, Vanguard missing out. Go for Hockeys. This is good evening all. Good to see you. Welcome to Central Park South. Check the Logic is here. Joseph Hardaway. Welcome, welcome, welcome. Jonathan in Florida. Good to see you, Jonathan. Rocket Mob says Vanguard will eventually come around. We'll see. It's possible. It's definitely possible. Middle-aged Grind says, hey Tom, cheers. JC says, will you be attending the rally? I will not. I think it's going to be too crazy, and the traffic is going to be nuts tomorrow. We're now outside of the JW Marriott Essex House. Hal T, good to see you. Okay, so Ben says, Tom, the culture was more outgoing. We made a lot of deals at Buck's Restaurant and Cliff House in San Francisco. Met and dined with Ellison of Oracle. Oh wow, Larry Ellison, cool. Wow. The night he met his current wife. That's very interesting. I'm sure you have stories for days. Very, very cool. Yeah, I don't know. I just think it's very, very important to try to have as open of a mind as possible. And this is kind of where I'm trying to course correct on my initial thoughts of Robinhood. It doesn't mean I need to be a customer. right? It doesn't mean I need to be a customer, but it means I need to be paying attention and not be so brash to say, nope, I don't like it, I'm not going to look at it, because this could possibly be one of the best TMLs of the next decade. We'll see. New England Crypto says that's very interesting from Vanguard. You don't usually see these companies giving a potential upper hand to their competitors. Not good long term. I generally agree, but the thing with Vanguard, right? They're very, very old school Wall Street. And if you want to take it a step further, thinking about Vanguard, as we overlook 1 Central Park West and 15 Central Park West, one of the things you'll notice about that company and its core founding values is John Bogle, right? Going back to, or Jack Bogle, however you want to call the gentleman. Unfortunately, he did pass away. I would recommend, not to segue too much, but one of the best investing books of all time, just for like basic investing 101, is called The Little Book of Common Sense Investing. Once again, The Little Book of Common Sense Investing by Jack Bogle. And essentially, he's really one of the main reasons why we have index funds, right? Low-cost index funds that track the S&P 500, that'll allow you to invest in the broad range of America's greatest companies at a very, very low cost. And those legacy Wall Street guys, generally speaking, tend to not be too privy on the idea of cryptocurrency, right? It's usually more of the younger crowd, the more progressive, so to speak. So it's not all that surprising that a company like Vanguard would come out and say that. Rocket Mob says, hey Tom, Microsoft's board will meet on putting Bitcoin on their balance sheet. Top 3 shareholders, BlackRock, Vanguard, and State Street. Yeah, I saw that. I think that came out on Friday night, I believe. And I think we covered it for a short while. There was an SEC filing. I believe the vote is going to be sometime in December, whether they will allocate at least some portion of the cash or cash equivalents on the balance sheet to make a purchase of Bitcoin. Now, to be fair, right, not to, be too much of a Debbie Downer, but from what I saw, the board is probably going to vote against it. Just from what I saw. But, going back to this conversation that we've been having, and this goes back to 2014 when I first discovered Bitcoin. It's like a slow roll, and then it happens all at once, right? And I've used this example multiple times. We'll just take one quick look at 220 Central Park South. This building right here was the best-selling building on Billionaires Row. Ken Griffin from Citadel Securities owns, I think, 3 floors in this building. And then you have Central Park Tower right behind it. But, I remember, 2014, 2015, almost every single person who was on any type of major, financial outlet, whether it was CNBC, whether it was, Bloomberg, almost all of the, pundits, so to speak, were talking very negatively about the space, calling it a Ponzi scheme, a pump and dump, whatever you wanted to call it. And there was a handful of analysts, handful of people saying, yeah, we recommend our clients have a 1% allocation to Bitcoin, right? Fast forward to 2017, that 1% became 3%. And now you have almost every single major financial firm, right, recommending, I'm talking about a wealth management office, recommending at least a 1% allocation everywhere now, right? You have Bitcoin ETFs, right, that are not futures based. They are spot, so they actually own the underlying asset, right? if there's demand, right? There's an old saying that if there's demand for a product, Wall Street is going to make a product for the public. So now that you have IBTC or IBIT, right? I think that's the ticker, IBIT or something. IBIT, the iShares Bitcoin ETF from BlackRock. You're going to have people at BlackRock recommending their products to clients to grow AUM. So always try to be catching a trend once while it's making its move. Right, when you have everybody in consensus saying, yeah, everyone, all of our customers should have a 5% allocation to Bitcoin, right? That's when the alpha kind of gets drained out of the trade, right? In the hedge fund business, there's something called crowdedness. If everyone on Wall Street is running the same strategy, right, our terminology would be called crowdedness. So that trade is very, very crowded. But when you have a dispersion, right, or a difference in opinion on a specific asset or a specific stock, you know, everyone nowadays, right, you know, if there's a really great company, they agree, yeah, you should buy it. But it's those kind of venture stage investments where some people are like, yeah, this is going to be the next best thing. Other people say, no, it's going to be terrible. That's kind of when you want to be getting in, because that provides you the best asymmetric risk profile, where the amount of money that you risk is very, very minuscule as it relates to the potential amount of money you could make, right? And that's really what the investment business is all about, is taking as many asymmetric bets as you can, limiting your downside risk while the upside is very, very high. This is West 61st Street. We're outside of 1 Central Park West. Reggie 44, this is Robinhood. Oh, I didn't know about that. Hey, David S., what's going on? Yeah, Reggie 44 says Diamond still personally doesn't like Bitcoin. That's true as well. Yeah, Alan. So I read that article too. That was a very, very good article. Alan's talking about the bond market piece that came out in Barron's today. You know, many people have been saying, you know, the market is pricing in a Trump win or a Kamala win or vice versa. But, you know, the bond market tells kind of a little bit of a different story. Could it be the return of inflation? I don't know. Could it be that economic growth is projected to come in much stronger for the next year, and the bond market is pricing that in? The bond market's potentially pricing in maybe a less aggressive Fed easing cycle than once thought. If we have so much powerful economic growth and good jobs numbers, it's possible. All right, let's head down. Let's head down 8th Avenue. Hey, NBA Live, this is Tom. Just finished Reminiscences of a Stock Operator. Awesome book. Thanks for the recommendation. That's one of my favorite books of all time, Reminiscences of a Stock Operator. Now, we spoke a lot about Paul Tudor Jones. Does anybody remember this week? Paul Tudor Jones was on CNBC, arguably gave one of the best interviews of the week. I know Ackman had like a 1-hour special on CNBC as well, but that was mainly geared towards politics. The Ackman interview. The Paul Tudor Jones interview was not really geared towards politics. It was more about the economy, you know, investing, stocks. Now, rumor has it, right, the reason why I bring up Paul Tudor Jones, as we're walking right outside the main valet here at 15 Central Park West. If you want to work for Paul Tudor Jones family office, right, Tudor Investments, before you can start, and again, this is rumored, but you have to read and complete cover to cover Reminiscences of a Stock Operator. That's the rumor on the street. So if that book is good enough for PTJ, it's definitely good enough for me. It's also a very awesome story too. New York City is in that story a lot. Oftentimes we pass by the Sherry Netherland Hotel. That's actually where Jesse Livermore, who the book is based off of, that's where he killed himself, right there in the cloakroom of the Sherry Netherland Hotel. But if you can get the audio book, we're not going to venture too far north, but if you can get the audio book of Reminiscences, I would listen to it once a quarter, especially if you're actively managing money. Hey, Luxury, good to see you. Cheers. Speaking of books, anybody read any good books lately that you think any of us would like to read or know about? Anyone reading anything good lately? Now, if you want my full reading list, I've been getting a lot of emails lately, people saying, hey Tom, what are the top investing books that you recommend? If you scan the QR code on your screen, I published our full 2024 reading list. Also, that's our free investing newsletter. So if you want to stay up to date on the markets, you can just scan the QR code on your right as the market closes. We're now walking down into Columbus Circle. This is where the congestion pricing is. John says, yes, read Letters and Numbers by Zachary K. Hubbard. Let me take a screenshot, I'll check it out. I'll check it out for sure. Go around the circle, then we'll head down 8th. Make this right and go around the other way, and then head down 8. Benz has rewired the McKinsey guide. I'll check it out. There was a book that somebody just recommended to me I was going to buy. Someone says Algebra of Wealth by Scott Galloway. Yeah, he's the professor at NYU, right? Let me see if I can find that book. I don't have my other phone on me. There's a lot of good professors at NYU. DeModern is another one. He's more of a finance professor. Ben says the book is about outcompeting in the age of digital and AI. Well, the craziest book that I read that I was able to see kind of come to fruition. And I mention the book all the time. I read this quite literally when it first came out. The book is called AI Superpowers by Dr. Kai-Fu Lee. And I read it when it just came out. And that book essentially forecasted everything that's been happening right now, right? With the acceleration of AI.
I'm not making it.
It talked really about the difference between, narrow AI and general AI, and how general AI, right, is kind of really far off at the time, and most of the models that are out are really focused on narrow AI. But for those of you who don't know, if you could look up the book and you could buy it, it's a great book. And also, listen to every single podcast that Dr. Kai-Fu Lee has put out over the years. He's a brilliant guy. At the time, before he wrote the book, he was the CEO of Google China. So his job during the whole tech and telecom boom was to kind of grow the Google search business in China. And what he learned through that experience was that a lot of Americans are kind of underestimating or have underestimated, innovation coming out of China. Because, China used to rip off pretty much everything from the US and the UK, right? They weren't innovators. They didn't really do anything themselves. But now, it's a little bit of a different story where, there's real talent coming out of China. Obviously not on the same level that you could compete with the US, but slowly but surely that trend is changing. That was a really great book. Ben says, yes, I've read that. Everyone should be getting updated on digital and AI. Someone says, do I know about the 19-year cycles? Like what, just a basic business cycle? Peter says Kai-Fu is also a great bridge player. Yeah, Peter, I think that was you. You went to school with him, right? Or something or other? That's insane. That's an insane story. NBA Elias, the everything war Amazon quest to own the world and remake corporate power. Let me take a screenshot of that. Thank you, NBA Elias. Peter says, yes, I went to high school with him. That's incredible. That's incredible. What was another really, really good article I read over the last 2 weeks? It was a cover story on IBD about 2 weeks ago, I think now. I don't remember the exact week, but it was all about Meta and Mark Zuckerberg's big push to kind of found the next generation really operating system, right? Because if you think about Meta's business model, I mean, it's a great business model, right? I mean, they generate a ridiculous amount of cash. The company's doing fantastic, but what is, like, if you could guess, like, what would be the one thing that has kind of been holding Meta down, right? Now, I won't keep you guessing. It's been the major hardware players, Apple, essentially owning the operating system and kind of playing gatekeeper for Meta. And Zuckerberg has been really, really upset about this. So he is trying to pioneer, right, the next operating system, right? So he doesn't have to be at the whims of Apple and Tim Cook or Google, right? So his bet is on a new operating system through these glasses. And I don't know if it's really going to take off, but if you saw the new, and I'm not talking about the Quest headset, I'm talking about more of kind of those Ray-Ban style augmented reality as opposed to VA. or VR, I should say, virtual reality. And Zuckerberg and Meta are really betting that that is going to be the next big operating system, where you'll just wear your glasses and everything will project imaging and messaging kind of in your field of view. It was a very interesting article that kind of digs a little bit deeper, right, to kind of get around the gatekeeper, so to speak, of Apple, Tim Cook, and the like. I mean, what do you guys think about that? Do you see a world where that could legitimately take off? I mean, honestly, right? Do you see people walking around with glasses? And I'm not talking about the big VR headsets, right? I'm talking about the augmented reality kind of meta glasses. Hey, love is kind. Good to see you. Thanks so much for joining us. Ben says, I don't see people wearing the glasses on a large scale, especially children. Cost would be a constricting mark as well. Well, I watched a keynote speech from Zuckerberg, and essentially he sees a world where instead of everybody pulling out their phone and looking at their phone every 2 seconds, that will slowly go away, and you'll do more and more of your everyday activities and computing on your phone. And he made this example that, you know, most of the time, right before a mobile operating system, right before smartphones, we did most of our computing on a desktop. Right, so most people, if you wanted to surf the internet, browse the web, stream something, watch video, most of that computing was done predominantly on desktop, right? And slowly over time, as mobile operating systems become a thing, more and more of that compute time is now mobile, literally in the palm of your hand. And you're looking at your desktop less often, and you're looking at your mobile phone more often for compute. His bet for kind of the third stage of operating is that over time, you're not going to have to pull out your phone as much to watch video, to respond to messages, to send email. His bet is that it's going to be these glasses that are going to project an augmented reality in your field of view, and you're going to have to take your phone out of your pocket less often. Again, I don't know if that's going to come to fruition, but it seems like that's what he's betting on. Alan says, I wear glasses day to day anyways because I can't see. I know. Lots of road rage action tonight. I don't know, it's interesting. So like a person like Alan, right, that wears glasses, I wear glasses too if my contacts are killing me. You know, maybe that would work, maybe it wouldn't. I just don't like to bet against these players, so to speak. Jason H, cheers, good to see you. Tom, a pair of glasses by Zuckerberg or a brain chip implant by Musk? Well, that may seem like a little bit of a silly question, but that's actually the multi-billion-dollar question, if not the trillion-dollar question. Right? What that person said in the chat, I can't pronounce your username. I apologize. Mata. That's the billion-dollar question. It is quite possible, and this is kind of my bet. Right, my bet is that the next major operating system is not going to be in the form of a physical device. That's my bet. Right, so we kind of went from doing most of our computing on a desktop. Now we're doing most of our computing on mobile. The next step is a hardware-free reality, right, or hardware-less reality, where we become one with machine, total synergy. And that happens, right? It may sound crazy, but that is kind of what they're working on with Neuralink, right? If you have a chip in your head, right, you essentially become one with machine. So I think that what Zuckerberg is investing in, all these billions of dollars, once that vision comes to fruition, we could have the technology available to everybody to totally remove hardware from the picture and just become one with machine. And I know that sounds crazy, I know it sounds like sci-fi futuristic, but that's where things are headed. Right? That's, I mean, if you have vision for the future, that seems as if where things are headed. Now, many of you would say, there's no way I'm ever going to get a chip. You know, that's what many people said about a phone, right? I'm never going to get an iPhone. I'm never going to get a cell phone. I don't need it. Now, everybody on the planet walks around with at least one device, right? Notice how I said keyword at least one. Most people have multiple devices. So you never know. I mean, people already are putting chips in their dogs too. Joel PM says we're headed towards the movie Surrogates, where we just control our robo-copy. Maybe. Yeah, I don't think anybody knows exactly what's going to happen, but it's definitely exciting stuff. NBA Live's hardware is getting more difficult and expensive to produce, that's for sure. Hey, Ryan Beck, what's going on, man? Good to see you on our very late night broadcast tonight. We started late, about an hour and a half late, but I just wanted to pop on real quick to say what's up. But good to see you. Thanks for joining. We have a very busy week coming up next week. Pretty much all of the major tech companies are reporting. Talking about Zuckerberg. We're going to hear from Zuckerberg, and we are going to hear from Alphabet and Amazon. We already heard from Tesla, which was an amazing report. And I think the stock had its, I think its third best week in its history. Hey, Doc7, what's up? Thanks for joining us as well. Yeah, Reggie44 says privacy is gone. I think privacy has been gone for a long time. Now, speaking of things that we've been reading, who read the article that Elon Musk, and this was Vladimir, takes on it? And this does tie into what we're talking about, right? Because we've been talking a lot about tech. That, you know, Elon Musk, we should cancel his government contracts because he's been talking with Vladimir Putin. We need to know exactly what he's been talking about. Oh, I think we were in a buffer zone. Hold on. Let's try to navigate through this buffering area. Let me know when we're back.
Look at that buffer.
Let's try to go over to the right. I think the closer we get to Times Square, the more buffering we're going to have. Reggie says it's better now. should be back. But my whole point with the whole Elon thing, talking to Vladimir Putin, is that the government already knows those conversations.
They didn't do last.
So in my view, the story is like a non-story, if that makes sense. Right? Everyone is freaking out and saying that Elon should have his government contracts canceled. But if you think for a second, okay, that the FBI, CIA, whatever, agency doesn't know exactly the conversations transcribed of what Elon is talking to Putin about, I mean, come on. It's obvious, right? The government right now has the ability and the technology to listen to all of our conversations, common everyday American people, right? We've known this for years now, the whole Edward Snowden thing, right? So if you don't think, okay, that the government could listen to every single, conversation that you've ever had, they know every single text message you've ever sent, they know all of your search history, it's like, come on. And if you don't think that the government is listening in, quite literally listening on a phone call between President Putin and Elon Musk, come on. Like, obviously they know every single thing that was said, the duration of the call, everything. It's obvious. And I think Elon Musk and Putin both know that. It's quite obvious. Man, the city's really, really packed today. Hey, what's up, Jay? Good to see you. Thanks for joining. Right outside the Late Show with Stephen Colbert. Mark Francis 076 says it may not be legal, but they listen to everybody. Totally, of course. Hey, William, what's going on? Hey, Tom, missed your Florida trip. Venice, Florida is okay now. Well, that's good news. Yeah, I was there for a short while, but a little bit longer than expected, for sure. I should say much longer than expected. Tomorrow night, I'm going to try to get down by NYU, that area. It's just, it's been a very busy week. So I've been spending much more time in the office. Look at this, they're totally clearing this construction zone out. So this is where the old Bad Boy Entertainment was. Speaking of, P. Diddy's been in the news lately. This used to be the Bad Boy Worldwide headquarters. It's now totally torn down, and I think there's going to be some sort of maybe mixed-use building built right here. And that place has been vacant for as long as I can remember. Ben says, am I invested in Japanese markets or any stocks? I would say, yeah, check out our X handle. And I've been writing a lot about Japanese equities. And I've been very, very bullish Japan, despite, I'm sure you were present for that kind of mini flash crash when everyone overnight became an expert in the yen carry trade, and they were saying, the market's gonna crash, here's everything going down. I think the Nikkei will hit a new all-time record high in very, very short order. Very, very short order. So I am bullish on Japanese equities. And I wrote a piece about really just bullish global liquidity. But yeah, we've written about it extensively. If you want to read some of my work, if you scan the QR code, it'll take you to our Substack, where I publish all of our research every other Thursday. But there's a lot of interesting things going on in Japan. I think the BOJ is at a critical point here. And just in the Asia Pacific in general, you know, you now have the PBOC easing significantly. Let's just cross over to the northernmost side. Man, tourism is really coming back to New York early this year. Midtown Manhattan is crazy. It seems like the traffic is wild. Someone says you're bullish on Japan despite BOJ stuck, unable to hike, and the yen climbing again. Yes. Yes, I am. I'm bullish on Japanese. I'm bullish on the Nikkei index. But yeah, all of our, if you're new here, I publish all my research. It's on there for free. We don't charge for it. I appreciate everybody reading, by the way. We have over 5,000 readers. So thank you so much. Appreciate it. You know, it's interesting, and I think Goldman Sachs just reported, or just came out with their projections for US equities over the next 10 years. And this is a topic we've talked about a lot. They are expecting lower than average returns for the S&P. They think over the next 10 years, and you could, I think I retweeted this, but I think Goldman is expecting 3 to 5% annualized returns for the next 10 years. So much lower than normal. That's really the consensus on Wall Street. I actually disagree. I mean, you think about the last 2 years, right? 2023, I think the S&P was up 23% that year. 2024, right, we still have some ways to go, right? Anything can happen. But S&P is looking like it's on track to closing up 20% plus again. All while we are about to enter a new bull market in global liquidity. Like, that's the most important thing to understand here, right? Is because we are coming off, this is the main soup Nazi place here. But we are coming off a bear market in global liquidity, right? And you can look up, you can just, Google, if you have Perplexity AI. I'm trying to train myself not to Google things anymore, and I'm using Perplexity AI. I think it's much better than GPT, in my view. Anyway, but liquidity is very, very bullish for asset prices. And in my view, knowing that the US debt is at $35 trillion and climbing, regardless of who, and this all impacts global equities, so just stick with me. Regardless of who wins the presidency, you're gonna have to really juice the economy to grow out of this, right? And this is something that Ackman kind of talked about on CNBC. He's like, look, there's no way that we can ever pay down our debt or get out of our deficit spending without growing out of it, right? So as we grow, as both monetary and fiscal policy remain much, much more accommodative, I'm expecting the U.S. economy to grow much faster than everyone's expecting. And I actually think we may have higher returns that are higher than the previous decade. So it's almost kind of like a contrarian bet, a contrarian thought, right? Usually on Wall Street, the most unexpected outcome is the outcome. I mean, if I told you today that the next 10 years, right, the S&P 500 is going to return above average returns, everyone consensus would say, no, there's no way, that's crazy, right? Even I would say that, right? Even I would say, no, there's no way, we're about to go into a age of a depression. But you kind of have all these factors at once, right? New emerging technologies, efficiency, that's going to drive profit margins through the roof, right? Which it's already done. Regardless of who the president is, by the way. We wrote an article stating that corporate profits in America and corporate profit margins in America hit a new all-time record high, right? This is under, and I'm just trying to make a point. I'm not saying, you know, which political side you're on is better or worse. What I'm trying to say is everyone who's kind of calling boogeyman on one side or the other, that says, you know, this administration is going to just kill business, this administration is going to crush corporate America. Well, the administration that was supposed to crush corporate America, I mean, corporate America has never been doing better ever than they're doing right now, right? Under an administration that's supposedly supposed to be doing, you know, detrimental things for corporate profits, right? So if we continue to have another decade, right, going back to ZIRP, right, assuming the Fed goes back to a zero interest rate policy, on top of all of this infrastructure spending, on top of a new wave of AI that's going to expand profit margins across the board, we could actually be expecting outsized returns, which is quite interesting to think about. I'm not saying it's going to happen, but usually the most unexpected outcome is the outcome, so to speak. We'll see. Yeah, Reggie 44 says higher returns and higher inflation will hurt the middle and lower class. 100%. You're 100% correct. And if you think about what has been happening over the last 3 years, it is exactly that playbook, right? It's been turbocharged growth. It's been runaway inflation in terms of asset prices, right? So if you think about equities, if you think about homes, right, hard assets, you've had runaway inflation there. And you've had CPI tick up, but it's come down some. But every single thing, right, that the administration, you know, they say they're against corporate America, they're against billionaires, they're against, you know, the ultra wealthy. But the ultra wealthy, the billionaires and the corporations have done better than they've ever done before in human history, from COVID until now, right? The best thing that could have ever happened to corporate America is the coronavirus. I hope everybody knows that, right? We won't go too deep into the weeds because we don't want to get banned. Maybe we'll have to, once we start up our second channel, we'll go into a little bit more of that. But all of that stimulus, both fiscal and monetary stimulus, we'll go back to Central Park and then we'll go back over because I gotta run. We started the stream a little bit too late. All of that trickled back into corporate profits. Right, all the stimulus checks. Everyone spent their money shopping online, you know, putting in renovations for their homes. That all went, it just always trickles back to the top, right? If you just hand people money, it'll always find its way back to the wealthiest people, always. All right, let me catch up on some comments. I got a headache right now because the city is just so loud. I got a splitting headache. Mark Francis says AI is definitely going to cause a bubble, which will drive growth in that industry. There will be big winners and big losers. I agree. Matis says the insane thing is AI suggested the U.S. government would mint a platinum coin of $1 trillion in deposit at the Fed to pay the debt. RB says, who the is will make a difference.
Mike's like, I'll drink the vodka.
I don't know. Hey, Anthony Torres, what's going on? Cheers. Thanks for joining. Joel PM says, will Trump tariffs kick off a new era of American production? Return to Made in America logo. The problem with the whole tariff thing, and we could go down a rabbit hole with that I see, is you really need to have everybody aligned and willing to suffer short term. But nobody's willing to do that. So that's why I think the whole tariff thing is going to be a pie in the sky idea. Not because it won't work, but because you really need you need the country united, and you need both sides of the aisle united to stick it out to negotiate better deals, right? So the whole narrative of, you know, we want to throw tariffs on everything to raise a bunch of money, that's really not the value proposition, right? That's just Trump's mouth to try to sell the idea to the common people. But the threat of tariffs will just allow us to have a negotiating position to renegotiate a lot of these deals. But that's not overnight, right? That's going to take many, many years, and it's probably going to take more than 4 years. That's my view, right? And yeah, that's kind of the thing that sucks with the country being so divided, right? And it's on both sides, because you have a lot of people out there, right, that if Trump wins, they will just do every single thing in their power to undermine him and not be Team America. The same thing can be said for Kamala Harris, right? If you have a Harris victory, you will have some Republicans that will do everything in their power to undermine the success of that administration and bust balls and make it hard, because they don't want to give the other side a W. And that's really the only scary thing that I've been seeing, really since 2016, right? Yes, there's been really vicious battles in politics before, but really not like this. We've gotten to a point where I hope we can change, right? Where we don't want to give the other side a W, because we're just so worried about the W's from our team, right? And I think it takes a lot of humility, and you really got to put your egos aside. That's the thing that kind of scares me the most. Yeah, Reggie44 says both candidates do not have good monetary policy. Or fiscal policy, I guess you mean. Yeah, the fiscal side of the house is definitely not sound on either side.
What the hell are you talking about? We all cheap shot at me.
Hey, Gary says, did you watch the Rogan Trump interview? I did. I thought it was really good. I believe it's just it's a much better platform, and it's a much better medium of, I was going to say medium of exchange, but medium of conversation, right? Many politicians, up until this point, they're not one person, they're like a creature and a vine of a machine. On both sides, right? And everything they say is very calculated. Everything they say is very scripted, right? Interviews are cut up and chopped up into a million pieces, and you really can't get to know the person. It's almost like they're not a person, right? It's a figurehead of a machine. And Trump is really the only person who is not that. And it's quite obvious that he's not that, because he's not polished. You know, he'll say crazy things, but you know what you're getting. You're getting a person. He's not perfect, right? But you're getting a person. So I think the longer duration, 3-hour, unedited, just conversations are way better. So hopefully we'll see Kamala do that as well. And I think that would be very good. It would show people that she's a regular person. She doesn't have to be, you know, hidden away, chopped up interviews into a million pieces. That's why legacy media is dying. I mean, that is the trend. Legacy media, cable news is dying. That is the new way. I mean, I'm sure like many of you, I don't really get my news from CNN, Fox News. I actually try to go out of my way to support independent journalists on both sides, right? That are left-leaning and right-leaning, because it kind of flips the incentive structure on its face, and it encourages people to at least be honest, right? They may have a different opinion than you, but at least you know that they're honest, and they don't have, you know, the big corporate machines like the CNN machine or the Fox News machine, you know, barreling down their throat. If you don't say this, if you don't say that, you know, we're gonna fire you, type deal. Like, there's this guy, he's a really, really smart kid. I call him a kid because I think he's, you know, in his 30s. And I'm a conservative, right? I would say I'm a full-through conservative. But I religiously tune in and listen to I think it's called the David Pakman Show. I gotta get away from Taylor Swift. I can't stand it anymore. I mean, big fan of Taylor Swift. I think she's fantastic. But I've had it with the music of Taylor Swift. It's just too much. But I wish her more success. I hope she makes another 10 billion. But I can't deal with the Taylor Swift stuff anymore. It's been nuts. But yeah, this guy, the David Pakman Show, right? He's a more left-leaning guy, but you can tell what he's saying. At least he's honest, right? And you're getting his point of views. You're not getting the CNN machine, right? The Fox News machine. You're getting an independent person who's an entrepreneur in America that's trying to build something for himself, and he's actively going through multiple sources, right, trying to present you with his perception of what's going on, right? So I may not agree with everything he says, but I think his presentation skills are very good, and his opinions are honest. Right, same thing for a lot of the other right-leaning independent media outlets. So I would much rather listen to them, right, and give my, you know, watch time to those types of organizations that are independent, just because nobody's writing his salary, right? It's kind of like what we've been seeing going on now with, I think the Washington Post refused to endorse a presidential candidate and everybody's freaking out. Like, I don't really see the big deal about that, right? Everyone's like, oh my gosh, I'm gonna cancel my subscription to the Washington Post. Number one, I don't even understand how anyone could have a subscription to the Washington Post. So it is actually probably better if you cancel it. But they're freaking out because they're not gonna make an endorsement for one candidate or the other. It's a newspaper, right? It's supposed to be a newspaper reporting the news, not sending us a narrative on which candidate to vote for. They're supposed to be independent, reporting the news, reporting the facts for the people to make their own decision, not to say, we are the Washington Post, we are the news, this is who we endorse. So I think that's a very outdated structure. That's just my opinion. But, you know, bringing it back to the investment business, these are all things, even though we're talking a little bit of politics, but these are all things to look for, right, as we look out into the future of which platforms, which mediums are going to succeed. Because it's not cable news, right? If you look at the viewership, it's essentially fallen off a cliff. Nobody anymore, most people, they don't sit home all day and watch CNN. They don't sit home all day and watch Fox News. It's just, it's a dying media empire. Which, if we really want to go down a rabbit hole, we could spin this to where this is actually bullish, a decentralized society, kind of sparked by Bitcoin and the like, where you have decentralization of news, which is really what we're seeing. You know, I'm sure if we have any Alphabet or, you know, Alphabet shareholders here, over the last 10 years, you've been feeling pretty well, right? They own a huge platform called YouTube, where many of you probably go to for news. I know I do. That seems to be doing pretty well. Multi-billion dollar business. Mata says, Tom, retirees watch TV all day long, and they get to vote too. No, you're 100% correct. But again, I'm looking to the future, right? I'm not investing dollars on what's happening today. I'm investing on what's going to be the growth story for tomorrow. Yeah, love this guy. This is Tom. I stopped watching the news because it gave me panic and anxiety disorder. You're not the first one. Hey John, thank you so much for your $2 donation. I will check out that news show. You're saying it's a very good channel. I'll take a screenshot. Thank you so much. I appreciate it. But yeah, you know, the last thing I'll say, and then I have to go back to the office. I promise we'll be on at a normal time tomorrow. We started extremely late, but we will be on normal schedule tomorrow. I'll leave you off with this. I would read that cover story in Barron's today, because that was like a spot-on article, right? We have the election coming up. Everyone's all frazzled and razzled up. But don't let your politics get in the way of your investments, right? What moves markets is not Donald Trump. It's not Kamala Harris. It's GDP growth and corporate earnings, okay? That's the simple formula. So long as GDP, right, and not 100% of the time, it's actually about 70% of the time. 70% of the time, if we get a positive GDP print, the S&P 500 will be higher 6 months after. So if Kamala wins the election, don't panic sell your stocks. If Trump wins the election, don't panic sell your stocks. If you panic sold all of your stocks in 2016 because you thought Trump was going to be the end of the world, which many people did, by the way. I remember the day Trump won, I was in college, I was a college student, and my professors were literally crying, right? Telling all the students that this is a somber day in America, this is the end of the world. And these are educators, right? Freaking out students. The market has screamed. You would have missed everything. You would have missed absolutely everything, right? If you panic sold when Donald Trump lost the election and you said, oh my God, Joe Biden and Kamala Harris are in, the country's gonna go to hell, we're gonna sell all our stocks. Well, you missed out on quite literally the most ferocious bull market of all time, okay? So don't focus on the politics, focus on the earnings. Focus on the GDP growth, and don't let the media scare you out of a fortune. And that's what the media has done really over the last decade, is absolutely terrify people out of an absolute fortune. So don't let them do it. But with that said, I have to go now. I'll see you all tomorrow. If you enjoy all of our financial talk and you want to see more of my thoughts on the market, you can scan the QR code on your screen, punch in your email, and that is our, what is it called? Investing newsletter. So Middle Age Grind, thank you for your very generous $2 donations. Just really enjoy your content. I appreciate you. Kaka Silva, thank you so much for your 50 Norwegian kroner. This is Tom. Tim Pool was getting $100,000 a week from Russia. He is right-wing YouTuber, so it's not decentralized. I don't know who that is, but I will look into it. Blue Sky, thank you so much. NBA Elias, Bill, thank you. Chris, Brian, all of our moderators, everybody, have a wonderful night. Be safe, put a smile on your face, everything's gonna be fine. We'll see you tomorrow.